Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Lewis O'Connor. Lewis is the founder and principal of Strategic Metals Invest, which is the only industrial supplier in the world to offer private investors the option to purchase and profit from owning strategic metals. Lewis, I am looking forward to talking metals with you. Welcome to The Wealth Flow.
Thank you very much, Keith. It's a pleasure to be here, and looking forward to sharing everything. Well, precious metals, technology metals, rare earth elements. I'm looking forward to getting into it with you.
Sounds good. I do like to start with usually your background. You know, what eventually led you to doing what you're currently doing, but where did you grow up? And tell us a little bit about kind of your journey along the way.
Okay, so it won't take long for you or your audience to realize that this is not a Texan accent. It's not even Southern or even North American. So I'm Irish. I'm from Dublin. Our business, just before I tell you a bit more about myself, is we are based in Europe, although we're a global supplier. So we have lots of clients and customers in North America, but we are based in Europe. I'm in Ireland, but our office is in Germany. And I actually spent quite a bit of time traveling earlier. I lived in Germany for 10 years. And I also lived in Central America for quite a long time, 15 years actually, before returning back to Europe about 5 years ago. And I specifically came back to be involved with this business. This business has been going about 30 years, but it's sort of growing at a phenomenal rate. And I'll just give a very brief intro to it, how I came across it is, I'm an investor myself. My primary interest is always real estate and still is. And I bought properties in Germany and Ireland and Panama. But I was I suppose the reason I came across it was I was in Panama, Central America, and I wanted to come back to Europe so my kids could go to school here. And I hadn't lived in Europe in about 20 years, 25 years. So, I figured I'm not going to just go back and get a job somewhere. So I was looking for something where I could be independent. And I found this German company who their core business is they're a metal supplier. So they buy from producers and they sell to manufacturers. So they've over maybe 4,000 clients in 70 different countries they sell metals to. But that's not what we're going to talk about today. But I mentioned that because if our core business wasn't as a supplier, it wouldn't be safe to invest in these metals because they're industry metals. So, they have an intrinsic value, Apple, Siemens, BMW, think of energy transition, electric cars. So for private investors to participate, you've got to be very, very careful because you need an exit, you need a liquidation, and only an industry supplier like ourselves can offer private investors a safe entry and exit into the supply chain.
Okay. Yeah, let's get into that and just tell us a little bit more about the types of metals that you deal with and what maybe differentiates yourself and your company from some of the others that are in the industry.
Okay, so the company's called Strategic Metals. Now, Strategic Metals is really an umbrella term for all metals that are the backbone of manufacturing in the 21st century. So I was just looking for my smartphone there and I haven't got it, but let's use that as an analogy, right? We all use smartphones. There's about 10 or 12 metals in every smartphone. There's gold and silver. The other 10 metals are the ones we're going to be talking about. Now, neodymium, for example, which is in the magnet, in the speaker in your smartphone, is also in the magnet in electric cars, in wind turbines. So they have multiple applications. And what's sort of fascinating to me, and was fascinating to me when I came across them, indium, for example, you can swipe your phone because of indium. So there's millions of people that touch indium every day, but nobody really ever considers that they can profit from owning that metal. So what they are is they're in all modern technology. They're in electric cars, wind turbines, solar, medical devices, aviation, nuclear reactors, space explorations become a fully fledged space industry. The easiest sort of term would be they are literally the backbone of manufacturing, and they are the downstream raw materials that ultimately become trillions of dollars in upstream GDP. When you buy these metals, you're buying the raw materials that Tesla are buying, Apple are buying, Ford Motor Company are buying. So I hope that gives, I'll just add one little thing before that, which is there's about 45 strategic metals, which we sell on a daily basis, but there's only about 8 that we consider relevant to private investors. And that's the key thing here. Some of them are not so rare, despite the name. So what we focus on are metals that we've 3 different approaches. We have a quantitative approach, meaning which ones are actually the rarest ones. Some of these are rarer than gold and silver. We've qualitative approach, which is which ones are in demand for, say, electric cars, computers, cell phones. And then we have we look at supply concentration. Some of the metals, there's a supply concentration risk. What I mean is there's a highly localized production. Gallium, for example, 98% of it comes from China. So those are that's the winning sort of investment strategy we use. Is we look at what are the rarest, what are the most in demand, and where is supply concentrated in one area.
Okay. And what are the 8 then that really you consider to be investments, and maybe on each one, if you could kind of give us an idea as to why that one is one that
so there's gallium. I'll give you 4 technology metals and 4 rare earth elements. So 4 technology metals are gallium, germanium, indium, rhenium. And then 4 rare earths would be dysprosium, neodymium, praseodymium, terbium. And interesting enough, if people start to look and Google, say if they're listening, if you Google germanium and gallium at the moment, you'll see that China has, in a month ago, banned the export of gallium and germanium to the US. Complete outright ban. First time they've ever done it. They did it about 10 years ago to Japan. Now, the reason for that, Keith, is since about 2018, the US and China and Europe as well is in a sort of a trade technology dispute with China. And what it boils down to is the US, South Korea, Japan, Europe, they have the technology for the most advanced computer chips in the world. Somebody here in Europe said the next Cold War 2.0 won't be an arms race, it'll be a semiconductor race. So at the moment, the US, Korea, Japan, Europe have the most advanced computer chip technologies, but China have the raw materials, and gallium and germanium are the raw materials. So at the moment, there's a bit of a standoff because the US and Europe are blocking these technologies from getting to China, and in retaliation, China has said, okay, well, we won't sell them to you. Now, we expect things to escalate with the new Trump administration coming in. But,
Yeah.
for example, gallium is up 50% a year every year for the last 5 years because of these sort of, the geopolitical or the political landscape also plays a role, even though they're just supply and demand driven.
Okay. And what's an example of what gallium, for instance, is used in?
So gallium is got many applications, and also dual applications, meaning civilian and military use. So that's why China is saying it's a national security issue, and because they've got military applications. So again, multiple applications. There's 3/4 of a ton of rare earths in one F-35 fighter jet. That's just one jet,
Wow.
Then you think of aircraft carriers, nuclear reactors, gallium as well. Night vision, which we tend to associate night vision as a military application, but the same technology that is in night vision is in self-driving cars. So these are areas where we see huge demand coming as well. But to be honest with you, it's easier to say what industry are they not applied in. As I said, literally, we live in this technology age. They're in all current technology. Everything from a microwave to a tractor has a computer chip these days. So, but the key areas would be semiconductors, computer chips, aviation, space, nuclear, and then all modern technology.
Yeah. Okay. Wow. And that's interesting. This, the fact that it's, doubled in price. You say 50%, double in price over the last several years?
Gallium has, yeah. You see, what can happen with this market, Keith? I know we don't have all day, but I'll just try and give you a quick idea. So the market for these metals can go from calm to crisis in a very short period of time. And the reason for that is, I'll just use gallium as a case study here while we're talking. There is not one mine in the world that exists for gallium or for hafnium or for germanium. So the reason for that is they're always a byproduct of another raw material. So they don't occur naturally in the Earth's crust. So gallium's a byproduct of aluminum mining. Hafnium's a byproduct of zirconium. So for every 50 tons of zirconium, you'll only get 1 ton of hafnium. So until we found more usage for them, they were really waste materials. In fact, I just read an article. There's about 500,000 abandoned coal mines in the US alone that have mine tailings that probably have some of these raw materials in them. So they, even though China dominates the market, there's plenty of these raw materials in North America. They're even in Europe, but what makes them complicated is they don't occur naturally. So there's never, or not always, an abundance of them. So there might be a concentration of 1% or maybe 0.001%, 0.001%. So that means it's not always economically viable to mine them. What happened in the last, and that comes to why exactly China dominates the market, is, I suppose, going back 25, 30 years ago when the world was high on the globalization drug, if you will, both Europe and the US, we sort of allowed China just to, these raw materials, it's complicated, it's messy, they have to be extracted, they have to be separated, they have to be remetallized. And Europe and the US just decided, look, it's messy. Why don't we just let China do it inexpensively? We'll buy the materials cheaply and we'll be all happy. That was, during the happy days of globalization. However, what's now clear is China understood probably before Europe and everyone else how vital these raw materials would be. But they literally, at this moment in time, are the dominant market leader in technology, metals, and rare earths. And some of your audience might know this because the Inflation Reduction Act in the US, despite the name, is all about energy transition. And there's billions of dollars available in subsidies and funding for the US to the US is doing, joining partnerships with Chile and Argentina, Peru, Bolivia. Europe and the US knows they must wean their dependence off China. But, it's not an overnight matter. This will take 5, 10, 15, 20 years to do. And then, of course, labor costs, insurance, everything will be more expensive in the West.
For sure. Yeah, no kidding. Wow. That's interesting. And so tell me a little bit about how one can invest in these, and, kind of what that landscape looks like.
Okay, so it's exactly the same paradigm as buying gold and silver, which I'm sure a lot of your audience would be familiar with. So our private investors physically own the asset. It's not a piece of paper or a share. So they physically own the raw material. And we generally, most of our clients, obviously, when they buy for the first time, they're not familiar with gallium or germanium. So we have a process where we get them sort of very well informed and educated first on each metal. We have a couple of presentations we can send to them. We can, if they have questions, we can talk to them. But some clients, for example, usually by industry or by investment strategy. So by industry, somebody might say, space exploration, anything connected with that, I want to buy those metals, or modern technology, anything that's in any current or future technology. So we can help them, we can point to them in that direction. However, we recommend diversification. And what I mean by that is if somebody's starting off, we say start, with a smaller position, come in, buy one of each, maybe a kilo of each, not even a huge amount, $10,000, $15,000. And, once you've bought them, you go down that rabbit hole and you'll start to learn. And then because you can use our platform to buy and sell these metals. The other approach is, as I briefly mentioned earlier, is the quantitative approach, which is which ones are actually the rarest. Some of these are rarer than gold or silver, and right. Then which are what we call the qualitative approach, which is which ones are the most in demand right now and the most critical to electric cars or wind and whatever it might be. And then the last one we recommend people look at is the supply concentration risk. Where is there a highly localized production, like Russia or China, where the political landscape can also, jeopardize supply? And that's, we spend a bit of time helping people get educated, but at the end of the day, if you buy all 8 metals, you're invested in everything. There's not an industry you're not invested in. So you're very, very well diversified.
Yeah. That's, and so if you physically are buying the asset itself, is there storage? What, tell me from that standpoint, how are you holding, the physical asset?
Good question. Very important. When you're dealing with industrial metals, the chain of custody, because no manufacturer, whether that's Apple or Siemens or BMW or Ford or Nvidia, they won't buy metals even from us if the chain of custody is not 100% intact. So that's where there's a few little characteristics that are different to gold and silver. You can buy and sell gold and silver all day long. I mean, if you have gold sitting here, you could physically take it into the local, whatever the closest dealer is, and buy, if you have it in Singapore or in storage. But with industry metals, it's very important they remain in the chain of custody. So essentially what we're doing is we're inviting private investors to participate in the supply chain. As I said at the beginning, our core business is we buy and sell metals. We have an office of about 45 people in Frankfurt. 90% of our business activities on a daily basis are buying metals, and we sell them then. We've got over 4,000 clients in 75 different countries globally. So we also have a vault in Frankfurt, 2 levels below ground, 1 above, with the largest inventory of technology metals anywhere in the world outside of China. So we have a huge inventory there. And when our clients buy, now they can choose individual custody or collective or fractional. But we always recommend they store the metals in our vault as well, even though they own them. And the reason for that is for liquidity and chain of custody. And I'll just explain a little bit further. When your metals are stored in our sister company, it's a completely separate legal entity to who you purchased from, but it's 100% owner operated by the same family. But when you store them there, you have immediate access to our database of 4,000 buyers in 70 different countries. If you were to move them, let's say to Texas or Delaware, whatever, you're removing them from the chain of custody, and we don't recommend it. And, to be honest with you, I've had clients not buy metals from us because they wanted to store them at home, say in the US or UK.
Yeah.
And it's better they don't buy. And the reason is, Keith, look, we don't want any uncomfortable situations with private investors. Our core business is far too important for us to have something badly written about us So the concern or the worry is when somebody wants to take delivery, the first thing is financial, is they're going to have to pay for the transportation, they'll pay customs, wherever they're going to import them to, but they've taken them out of the chain of custody. They're not a recognized industry storage facility. Then the other side is they might get to the US customs in America and somebody, let's say Gallium, it's got military applications as well as civilian. US customs might want to know, well, why are you importing, X amount of gallium? And, you're not involved in the industry. So they might not allow you to take delivery of it. And again, these are the type of problems we just don't want. So we absolutely, whereas if it's in our vault, it's in in Europe, it's an acronym. It's a REACH certified facility, meaning it's a recognized facility for industrial metals, and any industry buyer or manufacturer will buy them once they're in that facility because it's recognized for storing. So again, it just means very, very extreme liquidity, instant. If somebody wants to sell metals today, we'll make them an offer today and can close the deal in 2 to 3 working days.
Okay. Are these various metals stable in the sense that, what kind of storage considerations do you have to have? Obviously, your facility is going to follow whatever that, proper storage is for them. But just curious from a stability standpoint, I mean, is this something that, is there a byproduct of, potential waste or something that can cause a problem to the environment, or are they fairly stable, like, for instance, a gold or a silver can just sit on the shelf?
Yeah, by the time they arrive to us, they are stable. But yeah, that initial extraction, where they're sort of they're chemically, as I said, they don't occur naturally, so they're chemically similar. So they have to be extracted and separated, and that is a dangerous enough and can be environmentally difficult process. Luckily, in the last sort of 25 years, the industry, especially in China, there used to be sort of rogue mines operating and stuff. They've completely cleaned it up. In fact, the Chinese have just they've now patented a new, it's not in full mainstream usage of yet, but they've just found a much, much greener way to extract, and it's using sort of flashes of electricity to separate instead of chemicals and stuff. So, but yeah, so to answer your question, when they get to our vault, they are stable, but they can be stored almost indefinitely and under the right conditions. Now, because of our other business selling to manufacturers, they can be in metal form, ingot, oxide, which is powdered form. They can be nitrate, they can be liquid. So some of the materials we store, do require certain conditions, but that's, what the vault is there for. It's fully insured. It has REACH certification, but generally as a rule, once they arrive to us, they're absolutely stable. And, the metals are just like gold and silver. They don't need too much care and attention, but some of the other ones will be in the barrels or boxes or a sort of a sealed drum, which brings us back again to liquidation. For example, if you bought metals from us, Keith, your metals will remain in the original packaging from the producer in our vault. So it'll have the label on it with the purity and the batch numbers, and no industry buyer will buy them from us if they're not in that original packaging. So that's another safety thing in terms of from an investor's, they want to know, how can I liquidate these safely, and they have to be stored in the original packaging to be able to do that.
Okay. And from a sales standpoint, so an investor buys them from you, they store them with you, but you were saying that you have a platform with the availability to be able to sell them as well. What does that look like, and what does that entail? I mean, is there apparently there is a demand for these metals. Obviously, they can be used in all sorts of things. So how does one go about selling them, and what does that process look like?
Okay, so the vault in Frankfurt, the facility, it's a duty-free zone. So it's just like storing in Switzerland or in Singapore. So when our clients, it's a duty-free purchase and sale, and what I mean by that is, when you buy, there's no tax, and when you sell, there's no tax. If you've held them, or maybe I should say duty as opposed to tax, if you've held them for a minimum of a year. So you can sort of use our platform to buy and sell metals. And as I said, the market can go from calm to crisis. I mean, during the last 4 years, for example, if you look at some of our, like at the moment, terbium shows it's up about 125% in the last 4 years. But actually, during that period, it went up 500% in a 3-year period, and it's now corrected. And the reason for that is there's an inelasticity to production. As I said, because they're a byproduct of another base metal or another raw material, when demand increases, supply just cannot be increased just because of that. So there's huge demand for them, as you said. And again, what's really the crunch at the moment is this trade technology dispute, particularly with North America, and particularly with this new administration coming in. I mean, Trump's already talking about tariffs and things like that. And like the last, I mentioned to you that China is currently banning gallium and germanium. That ban is only a month old. But the last time something like this happened was in 2010, 2012. And there was a trade dispute between China and Japan. And the Japanese sort of kidnapped a captain of a fishing trawler fishing in disputed waters. In retaliation, the Chinese banned the export of rare earths to Japan. And in the space of a few months, we saw prices sort of 3x, 4x, and 5x. So again, on a good day or on a normal day, there's there's always demand, and prices, are steadily increasing. But if things escalate from, the political landscape, then you can see massive price spikes. And I'll just add one thing there that's important as well, which is within the industry, there's a nickname for these metals. Some people call them the spice metals. And I mean spice meaning, the way you add a bit of spice to food. So, so they're only used in small doses. They're like in the iPhone, you've gold and silver, and you've micro doses of indium and neodymium. So because they're in such small doses, and they're still also critical to production, it'd be far, like if the price for gallium goes up, doubles next week, Apple, Ford, all the manufacturers, they'll just absorb the price, because it's far more catastrophic for them for production to stop than for them to they'll just add the increase and pass it on to the consumer. So when the prices spike, manufacturers just absorb the price, because, it'd be far more catastrophic for the production of the iPhone to stop than it would for them to pay more money for gallium, So these are the dynamics that are involved that aren't necessarily involved in other areas of supply chain.
Yeah. Very interesting. And so, what are, I guess, maybe some other things that you can just share with us about this, and maybe why you feel that investors really should consider this as part of their portfolio?
Okay, so diversification, I did mention already. And also, you talked about earlier about availability, that, we are the only genuinely, and I can say this with certainty, we're the only industry supplier that invites private investors to participate. Now, um, that might change at some point in the future. So you could say it's a relatively new asset class to private investors. We're in business about 30 years, but we've only been offering this to private investors since about 2010, 2012. It's been very profitable. It's been a winning investment strategy. I don't think anybody would argue when they look at the applications that these demand for these raw materials are going to continue to increase. And I don't think
Sure.
anybody would argue that there's a potential for profit when you look at, you know, the sort of supply concentration risk, the quantitative approach and the qualitative approach as well. It's a very simple formula, which is, high demand or increasing demand, supply disruption, supply bottleneck equals potential for profit. Now, having said that, though, it is a speculation. The prices can go up or down. Sometimes this market can defy market logic because, China pretty much decides on the prices. And what will be interesting in the next few years is how China responds to the US building its own supply chain, Europe trying to do the same. What's happening at the moment are partnerships amongst nations everywhere except China, because the bottom line is, and I mentioned the US just because your audience is North American. I'm not like I'm picking on the US, but
Yeah,
the
no problem.
US, Europe, Japan, South Korea, they've realized they have to wean their dependence off China because these raw materials are critical to all nations' economic prosperity, as well as sort of increasingly military capability. So, it has historically been a winning formula, and we believe it will continue to for the next 5, 10, 15, possibly 20 years.
Yeah, yeah, for sure. That's it's fascinating. I mean, it's a different aspect. Typically when we've had other guests on, regarding metals, it's typically precious metals. The gold, the silver, platinum. But this there is such an application for this, and as you point out, I mean, it doesn't seem like. Um, the demand is going to continue. I mean, we're continuing down the path of technology, and it seems that these are going to be continued to be used. There is a shortage of supply, or at least the supply can't necessarily catch up with the demand. So it seems like a really just a neat industry to be in. So
Yeah, and I think you will be hearing more and more about it. As I said, gallium and germanium sort of made the news in North America. I was invited on to CNBC and talked about it as well. And one of the reasons, your audience might wonder is, well, how come, if this is such an interesting thing, how come I never heard about it? And there's two reasons for that, which I think will sort of change. One is that we don't do any marketing to private investors. And the reason we don't is our core brand is we're an industry supplier. So, it wouldn't work. So we don't do any marketing. What we do is we outsource sales and marketing to a limited number of sales partners like myself. And we do all the marketing, if you will. Until very recently, all of our partners are in the German-speaking region of Europe, Germany, Austria, Switzerland, because it's originally a German company. But since 2020, we've opened it up now, and actually, we just had just in the last 60 days, we had some people over from the US, actually US Navy veterans who created a company, and they're going to be one of our partners in the US, with another firm in California, who are doing their due diligence, but who want to become a partner. And we've somebody in New York. So for the first time, probably 2025, is we'll actually physically have sales partners in the US as well. And I think people will hear more about it. And I would imagine at some point, somebody in the US might do this anyway. I mean, it's a very, very, smart move, shrewd move. And I'm sure if we can do it here in Europe, somebody in North America can do it. But we've plenty of US clients. I mean, that's why I'm talking to you today, is we get a lot of interest from the US. And so we want to develop that market a bit more. So yeah, and the other reason your audience wouldn't have heard about it is these raw materials are largely ignored by institutional money. They're not on the radar of Goldman Sachs, and the reason for that is they sort of only represent a small economic visibility. As I mentioned, like they're the spice metals, so the total production of hafnium would probably fit in one truck. So the likes of Goldman Sachs won't venture into this because it's it's $1 billion industry, but it's not $1 trillion industry. I mean, the market cap on gold, I think, is 17 trillion. So they're largely up till now ignored by the big money. So, it's an opportunity for private investors, smaller investors to get involved in an industry the big boys are not paying attention to and win.
Yeah. And what is some of maybe the science behind some of their applications? Are there other metals that will do something similar, or like you mentioned, being able to swipe on the phone? And I mean, are there other metals that allow that you to be able to do some of those applications, or why? Or what is the utility or the reason that those are used? Any of that insight that you can provide us, Lewis, would be great.
Well, that's a good point, Keith, because you've got to think there's pros and cons, and one of the cons would be substitution. Just as you said, at the moment, I mentioned indium, you can swipe your phone. Somebody may well come along with another metal or another technology that will do that better. So you'd have substitution. Luckily, in a way, well, first of all, they all have multiple applications, but also it's almost like we're at the age of technology metals and rare earths. Like, for example, they were waste. There were mine tailings until during the 1960s, when we went from black and white TVs to color TVs. We started to use them in the screen, so we started to find a use for them. And then in the 80s, with the technology age, we've really, so we've only just began to use them. Well, what's fascinating about them, like gallium again, for an example, you could Google this on YouTube, right? If you Google robot liquefies and remetallizes, and there's a YouTube video of a little gallium robot, right? And it's sitting in a cell, there's a little jail, and it liquefies itself, something like, the Terminator. And then it slides under the bars and it remetallizes before your eyes. It's not a trick. You can do this with gallium now. And so where that's heading is in the very near future, and we're already there with wearable medical devices, which will be sort of like a paste. And these are all rare earths and technology metals. And that, gallium won't be the only ingredient, but probably dysprosium, neodymium will be in. And what they'll do is they'll send a little robot into your bloodstream. Now, it's still a few years away, but this is where it's heading. And that robot will go in and work and repair and kill bacteria or whatever, and then come back out. So there could be substitution, but the applications are endless. And artificial intelligence, and all future technologies are using these metals as well. And then on the other scale, hafnium, for example, hafnium can withstand unbelievably high temperatures and still perform. That's why it's critically needed in jet engine, nuclear reactors, space, rocket engines as well. So there's no other material, that can do that at the moment. Now, could it be replaced? Yeah, but we've only really just began to use them, so it'll be a while yet before we see any sort of substitutions. But that is
Yeah.
what we would call as pros and cons, right? That there could be a substitution.
Yeah, and I think that's true with anything, though, that you invest in. There's always, times where the demand is stronger and others where maybe there is some type of substitution that comes up. And I assume that probably there's some additional metals and other byproducts that at some point may very well become the new product that your group is storing and holding on to. So just a very fascinating industry altogether. Is there any kind of a I don't want to say discount, but maybe discount of pricing depending on the quantity that you buy, or is it how does the pricing work on these metals?
Okay,
Does that
so
make
I'll explain the transaction process. So, we as an industry supplier, we offer private investors the ability to participate in the supply chain. Now, they don't have to buy industrial amounts. Like most industry buyers are buying in metric tons. Our clients can buy in kilos. Now, our principle is, and again, this comes back to, we don't want any uncomfortable situations with private investors. So we offer the price at the same price as what any industry buyer is paying. So an industry private investors price is not any more or any less than everybody else. It's aligned with the industry pricing. So
okay?
that's where they are on the entry point, if you will. Then for storage, there's 2% a year for storage, and that's probably a little bit higher. People are used to paying maybe about 1%. But the reason for that is that number one is insurance. About half of that is insurance, but also, as I mentioned earlier, the vault is REACH certified. So your materials have a REACH certification. What that means is they're recognized in this industrial products and can be liquidated at any time to an industry buyer. So the holding fees are about 2% a year. And then on the exit, when clients want to sell, we will offer them, and this is where there's a sort of a spread or an exit fee, if you will. We will offer them current market value minus 10%. So people have to factor in at the end as a 10% spread. But besides that, the price is aligned exactly with the industry. Now, if somebody did come in and wanted to buy, some large amounts, we could always negotiate, on the price as well. But that'd have to be fairly big amounts,
Right, makes sense. And so maybe also if you could give us an idea as to how some of these 8 various metals have performed in the market. Over the course of, I don't know, whatever maybe information you can share with us. How much have they gone up in price in recent time, and from an investment standpoint, what does this potentially look like for investors?
So on average, like the 8 we've been talking about are sort of up about an average of about 34% a year for the last 4 years, for the last 5 years. Now, as I said, if somebody goes to our website, they see on the chart, like I think I mentioned terbium, it looks like it's up about 125, 140% in 4 years. But what that percentage doesn't show is it actually went up 500% in a 3-year period and then corrected. So what we suggest to our clients is always we don't want day traders, right? It's not crypto. They can go up, the prices can spike in short periods of time, but we suggest to people, please don't buy these metals unless you're willing to hold them for 3 to 5 years. Because again, it comes back to, we don't want uncomfortable situations with private investors. We want people that can, it's a sort of a long-term play, medium to long-term play. And look, they could make a lot of money quickly, but it is a speculation, and it could take 3 to 5 years. So that's what we do. And if people look historically at the prices, like they're, like gallium's up 50% a year. Some of the others are up 20%. So our strongest suggestion is stay in for 5 years, even longer, and you'll be very, very happy with the results. And historically, people can see, we have historical prices on the website as well. They can go back 3 months, 6 months, a year, 5 years, 10 years, stuff like that.
Okay. No, that's helpful. And in just a minute, I'll actually have you kind of share where they can find the website and all that. But one question I did want to ask: you'd mentioned something about the storage being duty free. You'd said something about 1 year. So are they able to trade within that first year and it still be duty free, or do they need to store it for a year at least before they sell, for there to not be any taxes or duty on the on the sale?
Correct. They can buy and sell on the platform duty free at any time, because they're just buying and selling from us. Whereas if they want to liquidate completely, we'll be mediating a sale to an industry buyer. So that buyer could be in Japan, it could be in the US, it could be anywhere. So if it's less than a year, there can be duties. Not always, but there can be.
Okay. Yeah. Just wanted to clarify that. Okay. Well, Louis, this has been fascinating. It's always interesting to me. And part of the reason that we have this podcast is just, understanding and really sharing with the audience. There's just so many different things that you can invest in. And it's always neat to have somebody like yourself on, where here's another new one, that I didn't know about. And so really, really, this has been a great show, and I appreciate it. How can folks find out more about you, more about investing with you, and really stay in contact?
Yeah, no, thank you, Keith. And I've enjoyed the conversation, because you're good at this. I tell you, because you've for something because you've just heard about this for the first time, you really picked it up quite well. I mean, the questions you were very, very good in terms of being the ability to sort of follow it, because not everybody gets it. I can tell you, like, sometimes when I'm interviewing or doing something with somebody, like maybe a client, right, and they're not sure what it is yet, and they might think it's gold or silver, and when I start telling them about, gallium or germanium, you can see the eyes glaze over, and just you've lost them, But
Right.
you definitely have some curiosity or whatever it is, because it's been very fluid, and all of the questions were very, very good. So thank you, and well done. My website our business website is strategicmetalsinvest.com. If somebody goes there, they can download a brochure. But if somebody wants to email me directly and mention Keith, the show and stuff, they can email me Louis, Louis, at strategicmetalsinvest.com, and we'll be happy to help.
Perfect. All right. And then I've got two other questions for you that I ask every guest. One would just be any advice you would give somebody who's maybe just starting out in their investment journey?
I heard somebody say here, the worst advice is advice. So we're all great at giving advice, but I think the one thing for me, because I had a few interesting experiences. Now, I left Ireland very young and just went to Germany, and then I left Germany and I went to Latin America. So I've sort of started from zero a few times. And at the beginning, it was all about adventure and travel. But what I have learned is, if you do, genuinely find something you want to do, whether that's investment or whatever it is, just go for it and stick at it. I think what I found, because I did a few times, even started a few businesses where, the way when you're starting a business, they say, there's all these things don't do this, and then make sure you do this. And a couple of times I just didn't know what I was doing. I had to learn. But what I found is, you learn a lot from your mistakes. You really learn a lot from your mistakes, right?
For sure.
And if you just keep going, now obviously that sounds a bit of a recipe for craziness as well, because, at some point you might have to say, okay, but like, when you get that intuitive feeling about something, it's just keep doing it no matter what. Just keep going. And I think sometimes when you hear people sharing how their dreams come true, they just kept going, So that's what I would just say is, if you do have something you really want to do, go for it, and don't let anything or anyone put you off it,
No, I think that's great advice. How about a book recommendation? Doesn't have to be related to metals or investing, but it certainly can be just something you've read that's been impactful.
Yeah, I suppose it's always current, like, when you mention a book, I mean, I do read a lot and I love reading, so I'm always reading something. At the moment, I'm reading a book, Endurance, which is about Ernest Shackleton and that first effort to cross Antarctica back in 1917, 1918. And I mean, the name of the ship was Endurance. But what happened with these guys, I don't know if you know, it's a fantastic story. Is they and again, it might be why what I just mentioned about sticking at what you do. What happened to these guys very, very early on is the ship got wedged in ice, and it could not be moved, and it eventually went down. And these guys were left with a trek. I mean, I think it was something similar to walking from California to Alaska on ice with dogs, pulling stuff. And it was just an unbelievable feat. And again, I think it came, in their case, they couldn't give up. Like I was saying earlier, don't give up. But they only had one choice, which is to just keep going, And so that's what I'm reading at the moment,
Yeah, no, that's I've heard of the story, but did jot down the book because I have not read it. So I appreciate it. Well, this has been great. I think we'll call it a show, but thank you so much for being on the Wealth Flow.
Thank you, Keith. It's been a pleasure. Thanks indeed.
All right.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.